Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Good afternoon, everyone, and thank you so much for joining this session. My name is Poonam Sharma, and I am an Eagle Lab manager for Barclays. I'm delighted to be here today at the NEC hosting this session, and thank you for all of you for attending this session. During the next 30 minutes, then we're going to be in conversation with two fabulous people that'll be sharing with you lots of information around investment. You'll also have an opportunity to ask questions, so please just utilize the time that you have with them and make sure you get the best out of this session. So today I'm joined by Jim Shirley, and I'm also joined by Daniel Gaze. So thank you very much for joining us. Jim, I'll come over to you first. If you can just give us a brief introduction about who you are and what you do, that'd be great. Thank you.
Hi everyone, my name's Jim Shirley. I've been a CFO and finance director for over 20 years. I've worked in two very high growth scale-ups that we kind of grew and sold for several hundred million. I now have my own company called Funding Hero, which teaches companies how to raise early stage investment for pre-seed and seed. And I run a high growth fundraise accelerator based out of Birmingham City University. Our last two cohorts had 16 companies raising about £16 million overall.
Perfect. Thank you. And Daniel, if you could just do the same, please.
Yeah, sure. Hi, everyone. My name's Daniel Gaze. I'm an investment associate at Future Planet Capital. We're a venture capital fund manager based in Birmingham. We make early stage investments into companies with high growth potential. And my background, I previously worked doing private equity fund investments and also Standard Life investments in London, but currently within VC.
Perfect. Thank you. So Jim, we'll start with you with this question then. So as we all know, when it comes to businesses kind of scaling, looking to grow, investment is always a hot topic. It's normally like number one. So how would you describe the current investment market over the last 12 to 18 months? How would you say it's been?
Yeah, without swearing, it's been pretty difficult. There's not a lot of capital flowing currently. I think some of the stats from Bohurst that were announced recently show that 2025 is forecast to be at least 35% down on deals last year. And that current trajectory also means that the number of deals completed is at level about 2014. So we've not had a bounce back yet from COVID. We're still in a bit of a dip. I don't think the market's quite bottomed out yet. There is definitely that the bar has been raised now for trying to raise investment. Companies have got to do a lot more. The expectations now where kind of growth or cost has definitely gone. It's going to be, show us a pathway to profit, show us kind of clear traction, great evidence as a solid business model and a great team. But there is cash out there. The VC funds have got lots of dry powder. They've just been much more cautious. They want to need to make sure that, their balance sheets don't take another hit because they invested previously at very high levels. Then now it's just a case of just seeing which companies have actually got much more traction in a better place and I'll deploy their capital much more carefully.
Perfect. Thank you. We'll talk a little bit more about that a little bit later on. And Daniel, same question to you. So how do you think it's evolved over the last 12 to 18 months?
Yeah, I'd echo what Jim said. I think investors are cautiously optimistic. I think investors haven't gone away, but I just think they're more focused on the fundamentals. The bar has definitely raised for investors, and that's because we've gone through slightly challenging economic scenario or climate, and there's some risk and uncertainty. So from a Future Planet Capital perspective, that we're just more laser focused on some of the fundamentals. So we'll look at pathway to profitability. We'll be looking at that closer in terms of when will you reach cash flow positive position. Also in terms of capital efficiency and your cash burn. Again, we'll be looking at how are you utilizing that money? What's your cash runway? Are your operations lean? And then also on the downside, in terms of downside protection, we'll be looking at things like, are there potentially multiple revenue streams to provide us with a bit of protection on the risk side? And then finally, differentiation in terms of the proposition. Do you have something that provides a moat for us, whether that's your IP or your brand, something that provides a barrier to entry? So although the conditions and the market investors are being slightly more disciplined, I would say there's still opportunities for the right type of investments.
Perfect. Thank you very much for that. And just staying with you for the next question, what type of businesses would you say are attracting investors at the moment? Is it a specific industry or a specific business?
I'd probably say, from the industry point of view or sectors, AI is ridiculously attractive at the moment. If you look at 2025, the first quarter of this year, 30% of VC investment went into AI investment. And that's not hype. That's actually a signal which is showing the market that AI is very much the engine for transformation in all markets, really. Um, and then you've got things like clean tech, which I think is quite important, particularly from a decarbonization and electrification of vehicles side of things. We're seeing a lot of investments there. I met a founder recently, and he said, we're building uh, hydrogen powered vehicles for delivery, and that's in Birmingham. And he said, if we don't do it, someone else will do it, and they'll then control the market. So there's very much a race to the market for certain sectors like clean energy and AI. And there's that first mover advantage, and that's attracting a lot of investment interest, a lot of capital. Um, but from our perspective, and just bring it back to Future Planet Capital, we are agnostic investors. So we don't focus on any specific sector, and we've invested in a number of businesses right across the spectrum. So, for example, in our portfolio, we've got a business which produces hair care products for ladies with afro or texturized hair. And then at the other end of the spectrum, we've got a business which provides the digital therapeutic software for those that are suffering with Parkinson's disease. And it's delivered via one of those augmented reality headsets. So we invest right across the spectrum, regardless of what sectors are popular or have high interest. For us, it's more about the fundamentals. Is your business in a high growth sector? Is your business in a market that's growing? Do you have barriers to entry? Do you have sticky customers, repeat revenue? That's important to us regardless of the sector.
Perfect. Thank you. And Jim, what are you finding when you're kind of same question really? What are your thoughts?
Yeah, I think again, I work agnostically across all sectors, and there's some incredible businesses out there. I've worked with some incredible clean techs, kind of with water-based lubricants. Worked with some biotechs that are going to transform healthcare, create new verticals. Some great advanced manufacturing businesses, autonomous robotics. We've got like a robot walking around today trying to give high fives and stuff. I think autonomous robotics is going to be a really, really big thing. Where you can see really big value efficiency being given to kind of large manufacturers. But again, I was looking at some of the stats from Bowhurst, and 50% of the overall deals are still based on software. As Daniel mentioned, AI is still a huge factor in that. SaaS businesses are still on the rise. 12% rise year on year. Fintech another 12% rise year on year. Cybersecurity again another hotspot as well. So there's always going to be cash across all different sectors and stuff. I think it just comes down to quality businesses with great traction, great evidence of a solid market, and ability to execute and stuff as well.
Thank you. So just following on from that question then, what are the biggest risks that you think, risks and opportunities that businesses should be aware of when they're looking to raise investment?
Yeah, I think so. I was just talking to Rupert, who works with Daniel, and he was saying one of the biggest issues we have in the region is we don't see enough investor-ready companies. So we've got great companies looking for cash, but are you actually investor-ready? So that's one of the biggest risks because there is lots of capital to deploy. Future Planet Capital have got a huge fund that's there. The Minas Energy Investment Fund, £400 million there to be deployed. If your business isn't in a ready situation to actually take investment, that's going to put the blockers on it. So I think first of all, getting investor ready. The other risk I think is it's taking so long to raise capital, companies actually running out of cash. So there's that danger where you might raise a kind of a first round, but if you don't have enough runway and have some contingency, the chance to raise a second round, you're going to get out of business before you get there. So you've got to have actually good sensitivity planning around that. Figure out how can you keep things going, and don't just do one round at a time. You have to look at what second and third round you might need. Get those relationships being built now. because it takes 12, 18 months to raise. So raise your first round. If your runway is 18 months, you've got to almost start again, getting ready for the next round as well. So you can't afford to kind of just sit, and pause, unfortunately. But I think the really interesting thing now is like with AI, even if you're not an AI enabled business, it's enabling so much efficiency for the companies anyway as well. So you can do much more. Whereas before, to get off the ground, for the pre-seed raise, you might have had to have, some kind of marketing kind of expertise, or some content creation. All that's done yourself in-house now. So investors are looking to see, how efficient can you be with capital, not just, initial investment for CapEx and larger things, but actually what can you do back office to kind of get more traction, for sales and marketing and that kind of stuff as well.
Perfect. You just touched on there about businesses being investor ready. So just for the purpose and the benefit of the audience, what does that look like being investment ready? What does that look like?
Yeah, I mean, Daniel's going to smile, I think, at this one. It's one of the biggest things, they spend their time on. There'll be great businesses that kind of turn up, on the investors' doorsteps, but they look at them and go, you've still got to put some of these fundamental things in place. So I think the first thing as paramount is going to be it's team. You've got to have a really great team in place. You can be an amazing individual as a founder. That's too much risk for a large fund to deploy capital into. So even if you haven't got people in house now, demonstrate what your roadmap for recruitment is. So have a talent plan, have people in your pipeline ready to hire and bring on board when the cash lands. You need to make sure you understand your numbers. I was doing a webinar with British Business Bank earlier on today, and we were saying that one of the biggest issues is founders don't know their numbers. They can't articulate clearly how they're going to grow and scale. So think about, what's the next kind of 12, 18-month plan, how much cash you need in the short term, what's going to be useful, what those risks are, what's that kind of 5-year journey aspirationally, and does that kind of fit with their thesis? But understand what are those kind of sensitivities around your business, what are the biggest risks. If sales don't kick in, then how will that affect our runway? And then that then kind of all gets wrapped up into be able to tell a really compelling equity story. If you can say to an investor straight away how you make money, how you plan to scale, and how you can get a really good exit, that's going to make a big impact. So I try and think about things as like a little story ladder. So one business I work with is in autonomous robotics. So they make money by having a £5,000 first of all kind of proof of concept to design how they would kind of work with a customer. They'll do a proof of concept robot actually in the warehouse for like £15,000 for 3 months. When they get that customer on board, they think that can be like £100,000 contract for over 12 months. They've got nice recurring revenue. They aspire to bring on 300 customers, which can get them to about a £30 million business. That might get them about £15 million EBITDA, their core profit. And in their sector, they might be worth at least a 10x multiple, which could be a £150 million exit. So within a few key steps of knowing those numbers, you can get investors really excited and figure out exactly how you can scale and will you fit their thesis.
Perfect. Thank you. So following on from that, a question for yourself. What qualities or metrics do you look for then when you're working with founders who are looking for investment? What do you look for?
Broadly speaking, we probably look at 3 things. We look at the product, the market, and the team. In terms of the products, the key thing which we look at is your product or solution solving a real world problem? And it sounds simple, but quite often it's not the case. We need to see a product which is solving a problem, because if it solves a problem, then there's demand for it. And if you can't clearly say that your solution solves a problem, you run the risk of being categorized into what we call the acronym we use is SISP, SISP, a solution in search of a problem. And that's like the worst place you can be in, because sometimes you see, it's heartbreaking really, see some founders and they've pivoted a few times, which happens, but they've pivoted their products and they forgot about who's going to actually buy it, where the demand's going to come from. So you should always make sure that you're focusing on that problem and solution. And then within that product side, we also look at an onlyness. You need to have some sort of unique differentiator, something that stands you apart from the crowd, or some way that you're going to disrupt a market that you're going into, where you're going to disrupt maybe the larger the incumbents that are already operating. Because if you can't say we're going to do something different based on our differentiation, you're probably competing on price or service. And if you're competing on price or service as a new entrant, you're probably going to get killed by bigger players. So then, yeah, that's product. Moving on to market. Yeah, the market needs to be big from a VC's perspective. Sometimes founders forget this, that we actually invest to then sell in, somewhere down the line. And the person that buys off us, our stake, is going to be looking at the market. Is it big enough? If the market's not big enough, that's not a great thing for us. That's definitely a sign. Um, and then finally, team. It's a bit of a cliche. Jim spoke about it already, but a team is so important to us. And when I say team, quite often when we're investing in early stage businesses, it's the individual. Is the individual, do they have the qualities to execute on the vision? Because quite often when we invest, the product or solution's not finished. So we're investing in that person to deliver. So we're looking at all different types of that, different parts of that person's characteristics, resilience. Are they able to take knocks and get back up? There's a good quote from Mike Tyson. Everybody's got a plan until they get punched in the face, and that's often the case which founders find themselves in. That they've got to enact Plan B very quickly. So the team's important to us, and then also coachable people that are going to be willing to take on advice. Of course, you as a founder are going to know your business better than anyone, but you may not know as well as us how to scale in a different international market, or what pricing strategy to adopt in a market. And it's not just us. We try to build a C-suite, non-execs on the board to help people or help founders navigate what's quite a difficult time. And probably one of the toughest parts of being a founder is, if you're a first-time founder, you don't know what you don't know. And the more help you can get from people around you is important. So yeah, we probably look at it threefold: product, market, team. And you wrap all of that up into an equity story, and then you've got a proposition that we can get behind.
Thank you. It's like you've seen these questions before, because this follows on very nicely to the next question. You've spoken a lot there around people, and you work very closely with Barclays. What is it about the relationship with Barclays that just works really well?
Yeah, we've developed over the years quite a strong relationship with Barclays. Probably because we're both aligned in that we both help to support early stage businesses. So we're a innovation banking referral partner. So we refer some of our portfolio companies, or even companies that we're looking at, onto Barclays, and it's great from them because Barclays provide them with a direct contact. They get a relationship manager, as opposed to going through a call center. They get tailored solutions. So Barclays offer a whole comprehensive range of investment solutions. So for example, we had a business which was expanding international. Barclays can help with that. They also get placed into the Barclays ecosystem for innovation. And there's a number of different benefits which the companies can get from that, including, there's different investor networks, accelerator programs, etc. And really within Barclays, it enables them to scale up. They have a program and set of solutions which enables a business to scale up from when they first come in, and if needed, right the way up to exit and IPO. And I think it just works for us because, without naming and shaming or saying any names, some of the challenger banks and digital online banks, which work for real startups when you're just first opening an account, when businesses get to the stage that we invest at, they need more of a comprehensive set of solutions. They're maturing as a business, and Barclays offer a set of solutions which matches that. So, for example, some challenger banks, which we've invested in portfolio companies that use those banks. When we've invested our funds, it's taken maybe up to a week for the funds to clear because those challenger banks are still doing KYC checks on who the investor is. And that can be super frustrating, for a founder. If you've gone through the whole process of getting an investment, you get 500K and then the bank holds it for a couple of weeks. So we don't have those issues with Barclays. And as I said, it's more of a mature bank for a company that's growing and ready to scale. and it works for us and from a relationship perspective.
Thank you. And if anybody would like any more information that we are exhibiting just in the center of the hall, so please come and speak to us or come and speak to me after this event and I can give you more information on that. But thank you. And Jim, 3 years now you've been working with Eagle Labs and what a journey it's been. You've been there through the transition into innovation banking. Why has it worked so well for you? Why has the partnership worked so well for you?
Yeah, so I've kind of got some history. So I used to work for a craft beer business, which we kind of scaled from about £500,000 turnover to £10 million run rate in 3 years. And when we were part of that company, we joined High Growth, and it was kind of transformational for us because having that kind of dedicated account manager just got things moving immediately. So we had a lovely hockey stick forecast, which we kind of took to the bank, and they laughed at us and went, "You're crazy, it's never going to happen." We went, "Well, let's have a bet on it then, shall we?" And we said, "Well, we need to kind of get an overdraft in about 12 months' time for about 300 grand because the beer sector, horrific payers, we wouldn't have had the working capital that we needed. We knew we need to raise about £3 million over the next 3 years. We're trying to plan ahead, but we need to get an overdraft sorted out pretty quickly. So we kind of worked with our account manager, gave them our forecasts, kind of checked each quarter and stuff, hit our metrics, and then true to the word, the overdraft was put into place. And we had other kind of benefits alongside that as well. But as we're growing quickly, you can't afford to slow down, and that gave us a momentum to kind of keep pushing and growing. So that was hugely beneficial. And then I think the second thing was for our high growth accelerator program that we run. We've got our next cohort starts in January. We've been able to kind of send all of our founders towards the Barclays Eagle Lab kind of services. They've got such an amazing portfolio of tools and support. But I think having the demo directory, for kind of angels that will invest in their company's potentials is a great source. We know how hard it is to find angel investors, so that kind of works really well. They've got an incredible knockout talent pool of mentors to kind of tap in for free and stuff as well. And then plus, the amount of resources is just like as long as your arm. So to kind of have that level of resource to kind of send to our founders to keep them moving quickly, it's just been brilliant.
Jim, thank you so much for your time today. Daniel, thank you very much. That's all we have time for. Thank you for attending and enjoy the rest of the afternoon.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.